Good morning, everyone, and welcome to the Ultimate Trading Webinar for Beginners. My name is Danny, and I will give you the webinar today. We will open the webinar with an introduction to the company. As many of you know, we are here since 2006, nearly 2 decades, and we are a regulated company with 9 licenses worldwide. In case you got a query or a question, you can always contact the customer service through the live chat or the WhatsApp, whatever you prefer, or directly through cs@avatrade.com. Now, this can be handy if you're using a different interface. So obviously, you're not going to see the button we have here at the left bottom corner, right? I see some people complaining that the sound is suddenly low. I hope that the sound is still all right. I'm not exactly sure because on the software it seems fine. I hope that the sound is still all right. So in case you got a query or a question, the customer service is easy to access either on the chat, WhatsApp, or directly through cs@avatrade.com. And if we got a question regarding trading, anything really from basic calculations to a strategy, making a trading plan, risk money management, all of those are under the umbrella of a senior account manager, which can provide you the assistance on the trading side. So we've got customer service for customer service. A senior account manager has the ability to take care of the trading side. Of course, they're not going to tell you how to trade, but they can definitely help with those effective things and additional things which you can address. And if you don't have a senior account manager yet, you can contact the customer service and ask for a senior account manager. All right, and now, as I said, we're going to carry on with the platform we're using now, which is called the Web Trader. Although, and on the app, almost forgot, AvaTrade's trading app. Okay, it's the same thing, almost the same thing. We have to understand that this is a computer and the app is an app. Okay, but the features that I'm going to show you today are similar, and you can obviously find them on the app as well. But before we carry on, I would like to also mention other platforms that we have, just for people to know, which are MetaTrader 4, MetaTrader 4, MetaTrader 5, and other futures and other options, and lastly, other social. Now, a question that I got today was, what are the differences between MT4 and MT5? Now, it doesn't really make a lot of difference what we're going to use MT4 or MT5 as long as we're making profits. But the technical and the functionalities between MT4 and MT5, personally, I haven't found a lot of differences between saving, maybe except saving a layout which is a bit more complex. With MT5 it might be easier. Also, if I want to diversify aggressively, MT5 might be more suitable, but they are both great. I mean, they're not really a lot of differences, and I suggest whoever is still testing the what is more worth to use to try them both, at least for 2 or 3 weeks, and then they have a better idea which one is more suitable. Now, I'm gonna say a few words about Ava Social, since this is a webinar for beginners, and well, Ava Social does have some efficient features for beginners. Of course, not beginners only, but okay, so we're gonna mention those features: copy and follow. I like to write them the opposite, but it doesn't really make a lot of difference. So let's suppose that we're trader A and we would like to follow trader B. Okay, how can this be useful for us in any way? Well, as a beginner, I'm not always, there is a question from Kimberly, do we need MT4, MT5 if we have the web trader on the app? No, Kimberly, thank you for the question. I almost forgot to mention that. But the important thing that I want to mention is that MT4 and MT5 do interact with the web trader. That means that theoretically, I can open a position here. I can open a position here in this platform, and I can go to MT4, MT5 and continue what I've my trades. Okay, and vice versa. I can open a position on MT4, MT5, come back in here and continue my tradings. Okay, so it's all connected. MT4 and MT5 are not connected, but MT4 is connected to the web trader and MT5 is connected to the web trader. All right, I continue. Thank you, Mary. I just wanted to answer Kimberly, and now we proceed. So Avasocial, really, it's super simple, the idea here. So what it gives us is similarly to what we see here. Also on the app itself, we can follow or copy another trader. Follow means we get messages, okay, with the positions, and we by ourselves need to choose if to open or not to open. We're following another trader. Following, that means getting the information, but not necessarily opening the position automatically. Okay, that's follow. What does copy means? Copy from the other end is automatically opening the position, like trader B. That means that actively my account will launch the position similarly to trader B. Now, the unique feature about Avasocial is that I don't have to copy the strategy to its full extent with the same lot size. This is extremely useful. How is this useful? Let's suppose at the moment I'm with $10,000, as you can see here in the balance. But what if I wouldn't have 10,000 and instead I would have maybe 1,000? Okay, 1,000 balance, and I'm trader A, right? Trader A. Let's say trader A 1,000, and I want to copy trader B that has 5,000. Okay, let's suppose I want to do that. Now, naturally, trader B might take positions that are too big for me for my account to handle, right? In terms of margin. We're still not sure what that is yet. We're going to learn. But the idea is that with Avasocial, I can copy from a bigger amount and I can fix the lot size to be smaller. Okay, for me to examine and see what's best. Obviously, I can raise it up to the original size, or I can even add more funds, make my account same as trader B, and then I don't have to change anything. But it's good that we have the ability to make the lot size smaller. This way we can adjust it accordingly. All right, so this is roughly about Avasocial. Of course, you guys can download the app and enjoy the journey by yourselves. But I just wanted to give you an idea here what can be done to be useful along your journey. Now, we're going to carry on with the web trader as I've explained. Avasocial is free to download, so I suggest you guys will give it a try regardless. And we're going to proceed with the features we have here to the left. We're going to look at the menus, understanding which ones are useful for us. So we're going to look at the top left is our personal information. Below that, we've got trades. Below that, which here, this is the default screen. The default screen sometimes look like this, sometimes it looks like this. And as you can see, I can toggle in and out to minimize or maximize the screen by clicking here on the two arrows at the upper corner. Okay, upper right, there are two arrows. You click it, it expands very easily. Underneath, we've got positions, we've got orders, history, signals. Let's speak about signals a little bit. Okay, we're gonna pick the first, let's say Euro USD. Let's click on Euro USD. Okay, so we click on view signal. We see there are a few things here. We've got the type, obviously, which scenario seems logic to the signal. I can go with it, I can go against it. We're gonna see in a moment. We've got here entry price. So I assume that this is where the analysis was started. As you can see, as soon as I clicked here on view signal, there was analysis here that I didn't do. this happened automatically. Even if I'll pick something else, you see the analysis is here. I didn't do this analysis. And now if I'll click on the arrow to expand, before I carry on, it's just important to understand that the signal production time is in linear timeline. So this is the newest. This is the newest. And it gets older and older as we go down. Okay, so the higher is the newest, and as we go down, it gets older and older. And that's important to know because obviously the scenario that was done here, since the market is moving up and down, let's say that in a few hours might look a bit different from the nature of the market. So we're clicking here on view signal, we're clicking here on two arrows, and then we're clicking on the buy, like the scenario suggested. And now if we're going to look at the lot size that we have by default, it's 0.25, excellent. And then we see here possible profit, possible loss. Okay, just a second, but how did we get here? Well, there are few types of pending order. There is market execution. There is pending orders that are stop loss and take profit. Also, I'm going to mention another one here. It's less relevant for the signal. I'll mention it anyway. I'll mention it anyway for us to have at the back of our head, and later on we'll learn how to use it. So we've got execute when price hits, we've got stop loss, we've got take profit. Execute when price hits, launches the position automatically. When reach the price, we've got stop loss, which stops the position automatically when reaching the price. Okay, and we've got take profit, which stops the position automatically with a profit. Stop the position automatically with a loss, Okay, maybe we'll put it at the end. This way it's easier to read it, right? Of course, you guys don't have to remember anything that I'm writing down because it's already written for you here. Yeah, it's written for you here. You don't have to remember anything. But still, I'm writing it down for you guys to understand in my own simple words for you guys to understand the meaning straightforward. If later on you want to examine and understand better how it works, you can point in here with your crosshair and right away you get the information. Right, so what is market execution? Buy or sell now. And we've got pending orders which are automatic. And as I always say, for people who don't get a chance to spend hours every day on the chart, but still want to trade, automatic orders, pending orders are a beautiful, beautiful solution. So this is something I really want to get used to if I want to save time while trading. Now, back to the signal. So you guys noticed that to get to here, it took me 3 clicks on the screen, maybe 4. Okay, let's try again. So we were here. So this is 1, this is 2, and this is practically 3. Practically 3 clicks, and we are ready. We haven't done any analysis. This was prepared for us from the nature of the signal. And how was this determined? That's determined by the analysis that was displayed in here. And we can see that there are some levels of resistance and support written here, and the pivot point and signal last. Okay, there's some analysis here. I'm not going to teach you any analysis now, but just to understand the logic of support and resistance. Support and resistance are edge points of the chart that seems likely for the asset to have some fundamental impact. So there are levels that are exceeded on exceptional occasions. Okay, and as you can see, those levels in here, maybe the top one I can mark and the bottom one I can mark as well in here, right? This was the previous, and we already broke it in here at the moment. This is the new resistance. So basically, those are edge points on the chart. They are marked for us. It's also important to match the same validity of the chart we see here to the chart we see here if we want to display the same levels. And as you can see in here, every candle is a day. It says here daily. And in here, every candle is 1M. What is 1M? 1 minute. I can also go down, scroll down, or click here on the thin toggle, drag it down. Doesn't really, there we go. And click 1D, and there we go. We got the days, and we can similarly place the lines. Although we don't have to. As I showed, it takes 3 signals to use the three clicks to use the signals. Let's try it again with a different instrument. Guys, so far, are there any questions about anything that I said? About the signals or about anything else? Are there any questions, anything you would like me to recap? If there is, please feel free. The second step that I'm going to show you, we saw the signals here. So this is provided to us by the Trading Central. And now we're going to have another example real quick. We're going to click on something that is not valid anymore. So I'm scrolling down. All seems fine. As you can see, corn here has a signal that is very old, right? As you can see, this is it's 5 in the morning. So if I look in here, it seems like the stop loss and take profit are not here. It's a blank value. How so? Because if I'll try a click on the signal and I'll expand here, and I will, let's clean it up a bit. And at the moment, as you can see, the market has already reached a key level. Okay, what does that mean? It means that the analysis that was done here has already passed. And if we'll try to use the signal the same way we did with Euro USD, it's not going to let us do it. So we're going to try. Okay, so that says here sell. We're going to click on sell. And nothing happens. We don't have the analysis similarly to what happened with Euro USD. So if we look at Euro USD, the healthy signal that we used as an example, we're going to see that the values in here can result 180, 128 if it gets to the take profit, and we can lose 62 if it gets to the stop loss. Which, just to give you guys proportion, you don't really have to do any of what I'm doing, but it's nicer to have it visible like that. The green line is representing the value for the take profit, and the red line represents the value for the stop loss. Okay, so if it gets to the green line, we're going to make 127. If it gets to the red line, we're going to lose 63. There is a question, can I trade futures on this platform? Unfortunately, Jane, no, but we have a dedicated platform for futures, which you can enjoy. Okay, excellent. There is a question here from Kimberly. When you reach the stop loss before getting take profit level, will the system automatically close so you get the losses, or it will wait to see whether you can get to the profit level? Okay. Reaching the stop loss level will close the position with a loss. Which you should ask Nidar. You should ask your senior account manager to assist you with the futures for the platform for futures. We're not doing that. We're not doing that here. But you can easily find it. You can really easily find it under trading platforms. If you go to avatrade.com, I just don't want to log off this interface, but you can really easily find it, I'm sure, in 10 seconds. All right, guys, let's carry on because I want to get to the practical part to give you guys really a useful, to get to the useful part. Also, this is useful, but still, I want to make progress, so I'll answer your questions a little bit later. So we're going to carry on down. This was technical analysis. So analysis divided to two parts, technical and fundamental analysis. As we can see here, support and resistance are among the umbrella for technical analysis. What are the differences? Technical analysis, we have two types, right? Two types of analysis. And we've got technical and we've got fundamental. So technical will be the averages, statistics, levels of support and resistance, all kind of things, basically the how, right? And fundamental analysis will be news, reports, articles, decisions, right? So basically, this will be the why. So Trump is making decisions with the tariff, and that has direct impact on the what? On the dollar, right? There's a question here from Michael. What is the successful? Guys, I'll get to that. I promise. I'll get to that. Just let me finish the first part first. I'm seeing everything. Okay, so this is important to combine both of why and how to understand better why the market is moving and how it's moving. All of those has certain things easier to get in our website. One of them is actually the news section. So we can click on the news. We can see different categories in here. We got all Forex stocks. At the moment we are in all. We're going to look at the pre-European market brief. If we'll scroll down under related instruments, we're going to click it. And we can see that we have crude oil, gold, Bitcoin, and USD CAD. This is excellent because now I know that if I'll go through the article, what can be fluctuative from that is crude oil, gold, Bitcoin, and USD CAD. Now, if I'll carry on down, we've got here Discovery. In Discovery, we've got Market Buzz. And in Market Buzz, I can also find some nice indication of things that can, news about things that can be interesting. What we can see right in the middle is Tesla with the bigger circle. We can see that we are now in bubbles. We can change it to the table. If we're going to click on Tesla right in the middle, it's going to take us to the page with the parameters, and underneath we've got different topics. So we've got the most discussed topics: revenue decrease, product demand increase, macro indicator decrease, and product demand increase, and product release. Let's suppose that I don't have the time to go through all of that, and really there is no reason to do it. I want to specifically target revenue decrease to understand what happened. So I can click it, and then it will specify which articles are related to that, and I can specifically go through them. Now, if I want to change to another instrument, I click in here, and I can just as easy select another one, NVIDIA as an example. And yeah, there are other parameters in here. I just don't want to delay about it too much because I want to get, like I said, to the second part. And I think that is mostly it. I also usually show the economy calendar, so I'm just going to show you how to get to there. Here underneath in this globy icon, we've got the economic calendar, and in here you can find, we'll give it a little bit of encouragement. Let's try. Maybe market buzz. We had to wait, and now. Okay, in here there are also a lot of parameters that we can set. It's very nice. I don't know, again, I don't want to delay about it too much, but the idea here is to give you accessibility to the events, articles, and decisions right away. You can see the previous forecast actual is the what already happened. So this red line separates events that took place to events that still needs to happen. I can also select the range by clicking on the date, then clicking again on another date. And when I have this blue trail, I know that those are the dates that were selected. Now, if I click in here on AvaTrade, it throws me back to the default screen, and then I can trade. And now let's select, we can successfully move to the second part, the practical part, and I will answer your questions, guys. But first, let's find ourselves an instrument to work with. So we've got different categories in here, hot, most rising, all of those. And underneath, we've got the categories, Forex indices, cryptos, commodities. Let's try commodities, and let's try agriculture. And maybe coffee. We've already done some analysis in here, which doesn't look bad at all. But I'd rather do it from scratch with you guys. Okay, great. So let's quickly go through the questions. What did I miss? What is the success rate? Right, so there is no way to know, Michael. Unfortunately, there is no way to know, because as I have explained, it depends when you're taking the signal. So of course, if you're going to take a signal that was produced now 5 minutes ago, and you will take a signal from 5 hours ago, can I tell you that they have the same success rate? Of course not. The market is moving, it's dynamic, it's impossible to say that. All right. So we have coffee here. Coffee seems like declining already. Let me just quickly, okay. Yeah. So it's heading down. It possibly can go even down to the support line. And I'm just placing here some lines to make it a little easier for us, guys. Okay, and I guess we can all see, if we'll take here a trend line, and we'll see that's not what I was looking for, just this one. It might be easier to convey what we're looking at. There we go. Okay, and with this in mind, just a second, and maybe we'll make it red, just the background. There we go. Okay, leave it like this. Just asking the win. I wish I knew. There is no way to know. How can you even measure that? I mean, you can't measure that. Okay, so as I was showing, as you can see, coffee from the past, since we're looking at days, since the past roughly month, it's been at 418. Now it's declining. We also have a reason to believe that coffee still has some way down to go, roughly $20 until the next support line. So we said the support line and resistance are actually edge points that we can mark on the chart. So this seems to me like a support that it can get to. As you can see, the coffee already. Okay, but before we proceed, because at the moment it's becoming a little more advanced, that what we can handle. Let's quickly go through the toolbar we have in here to see what I'm using and how I'm using. Okay, so this one is actually a search bar. We can click in here, delete whatever is here, just type whatever else we want and select it, just as easy. And if we want to bring it back, search, bring it back. If I go to the right, in here we've got a different time frames. We already saw that from the signal section. Keep going to the right. We've got here different different charts, so we can see that those are Japanese candlesticks, but we can make it look like a line, this kind of line. But as you can see in the line, where is the candle that we've marked? There was a candle in here, right? There was this whole thing here was a candle, a green one, right? Reversed hammer, to be specific. What happened to this candle? Let me bring it back. So this is actually a regular hammer, not exactly a hammer, but still, you guys get the point. With the line, we get less DAFs of information than the candles. If we do this again, disappeared. Okay, so I'd rather keep it like this. And if I'll keep going to the right, in here I can enable the crosshair. At the moment, there is no information coming from the candles. And this is why, because the crosshair we have by default doesn't do that. So we're going to click on the arrow, click on the crosshair, and now we do get the numbers and we can further do our analysis. If I keep going to the right, we can change to 2 different layouts, 3, 4 even, if we want to. If I keep going to the right, we have indicators. We're going to use it anyway, so there is no point showing it to you now. And lastly, the arrow, if I'll click, it falls down a whole inventory with all kind of useful things. Excellent, excellent, and excellent again. Let's get rid of everything we have in here so we can properly get to work. And now at the moment, with coffee in mind, coffee being bearish, let's switch to sell and let's fix the lot size. And we can see that with a sell with a lot size of 0.01 and thinking that coffee will go down, I still need to think of a price. So if I click here sell, what will happen? What will happen is if I'm with the sell, my intention is that the value will actually decrease rather than with a buy, right? When we are buying something, we want the value to increase. The higher it gets, the more money we make. So if we sell something, it turns around. When we sell, we want the value to decrease. And if it gets higher, we're going to have a loss. Okay? In this case, if I'm targeting the green line that I've marked at the bottom to be my take profit, okay, and we've learned the take profit, what it does. It's not written here anymore, but we've learned take profit, what it does is it closes the position automatically when reaching the price. Stop loss stops the position automatically when reaching the price, just with a loss, right? In this case, I want to be able to capture what price should be closed automatically, claiming my profits. Maybe I'm busy at something else. Maybe I am not necessarily on the chart all the time. Maybe it will get here and turn around. I want to close it automatically with the take profit. So how can I know if this 325 is a good price to aim for? How can I know? Just to help you understand a bit better analysis, this kind of candle, as you can see, the candle here is not a regular candle. Okay, it has this tail coming out of it, right? This thin line, which means that coffee has been on that price and turned around, which gives me an idea of what if it's gonna turn around again and not gonna trigger my take profit. Maybe I should put a little higher. Okay, so for all of those assumptions, we need some ground. How are we gonna do this? One way is to measure the average movement of how much coffee is moving per day and to know approximately how many days will it take it to get there. Again, this is not a formula. The market is dynamic. It can even go the other way around, but still, to have an average is a key ingredient for me to design the position. So how do we get an average? One way is to physically analyze the candles, pointing on them, subtracting the numbers, and basically accumulating all those numbers, which can take a lot of time. The other way to do it is to use an indicator. If we're going to click on indicators, we're going to click on type to filter, we're going to type AVE for average true range, click and drag it to the right. Now we've got settings, average true range. What is this length stands for? This length is reference, the reference for the length is what displayed on the chart. So if we're looking at daily candles, this 14 will be 14 days. If we were looking at weeks, this would have been 14 weeks. If we were looking at minutes, it would be 14 minutes. Yeah, so the length is actually what allows us to determine how far back we want to go and to withdraw our average from. So if we want to look back at 14 days, we're gonna just, I think, keep it like this for now, right? I don't see any major change in here in the past 14 days. Yeah, we're gonna keep it like this. Maybe mark it in a different color, not to be confused. Great, and we see that the average per movement per day for coffee is $6.7761. Amazing, which allows me to think that from 341 to 325, it could take a good few days. All right, we're getting somewhere. We're getting somewhere, but this is not enough because I still, let me mark it from where we are just to have an idea how much I can make. Okay, I can make 170 with 0.01. That means that with 10 units, if it goes down $17, right? Let's see how far we are. So we're going to take the current value and we're going to subtract from the current value the price we're aiming for. So this is $17 down, and because it's $17 down and we're holding 10 units, we're going to make 170. Okay, again, we're getting somewhere. It's getting slowly, it's getting in shape, but still I'm not really satisfied with how it's complexed. So we're gonna set some ingredients like target, time, movements, and units. So we will have some guidelines. We're gonna set the target of $1,000. And we're gonna look at the time frame of maybe not go too high. Let's go. Okay, the time 1 day. I highly doubt that. Again, our target is $17 away, and we are 6.7 per day. Okay, so that means, let me write it down. Movement per day equals 6.77. This is actually called on this platform ATR, average true range. Actual expected price movement is 17. But I'm not sure that 17 is really a good price to aim for since it turned around. Okay, let me focus on that again to show you guys. As you can see, it turned around. Okay, excellent. So if it turned around as a precautious, I think it might be wiser to lift it up a bit, maybe till here, I'd say, or maybe even here. Yeah, roughly half away, a bit less than that. Let's say $10 seems reasonable. And also, I'm going to bound the entry to 3242. This way, I get a clean calculation here. And then I'm going to go 332. Thank you. 332. And we have the, let's make it the exact, include the spread in here. Okay, and we've got it. Excellent. So in this case, when we're looking at the result, this is very far away from our target. Our target is 750, and we are actually now not looking at 17, but we're looking at 10. Now, since we're looking at 10 and the average movement per day is 6.7, how many days approximately, with no guarantees, do you think it's reasonable for that to happen? So if the average is 6.7 and we need $10 away, how many days should it take on average? Who knows the answer for that? Let's see who is quick enough. Of course, I'm going to provide you the answer in 10 seconds, but still I want to see where we are just to ensure everything is still intact. I hope you guys are understanding what I'm explaining here. Of course, again, if something is not understood, please feel free to share. 2 to 3 days. Thank you, Max. Excellent. Beside Max, anyone else has any idea if the average is 6.7, how many days to get to 10? Any idea, anyone? Excellent. Also Frank, 2 to 3 days. Excellent. And I am pretty much on the same page with you guys. 2 to 3 days seems reasonable. Of course, it's not a linear movement in here. 6.7, it can bounce, there is no assurance 6.7 is exactly the movement we're going to get. It could be more, it could be less. Okay, so 2 to 3 days, and 2 to 3 days to make $750 is not bad, at least not for that account. Right, so how many units do we need if we want to get to 750? So we can make $10 per $1 movement. Okay, let me write it to you as an equation. So we can go target divided by movements equals units. If we go 750 divided by 10, how many units do we need, guys? Again, let me see who understand the action here. The ATR NADAR is not something we need to calculate. The ATR is something we have applied to ask for the average from the chart. Okay, I clicked on indicators, I selected the average true range, and I decided how far back, how many candles we want to analyze. In this case, 14 was by default, and that gave us an average of 6.77 per day for coffee. This is how, if I'm expecting correct. Good job, Michael. Okay, and Louis. Good job, Louis. Also, good job. Okay, so this was the calculation that we did. Again, you can watch the recording. It's super simple. Okay, so everyone who wrote 7.5, obviously you guys are right. Let's put it to the test. So we're gonna see. We're gonna see something here is missing. No, of course not. 75, 75, 75, and not 7.5. All right, let's put it to the test. Okay, so 75 unfortunately is not doable with coffee because we've learned that the increments in here works in 10. So if I'll try and put the lot size 0.01, we're gonna see that by default it's 10. Why? Because the lot size for coffee is 1,000. So if I'll take 10%, that will be 100. And if I'll take 1%, that will be 10. Therefore, the increments of what I can use are only tens. And 75 is not doable. What I can do is I can either increase to 80 or decrease to 70. But let's make it 80. So with 80, we can see that we can make 800. It's not 750, but honestly, I'm quite happy with it. Stop loss, we can use the same ratio. So we took 342, we can just add a 10. Okay, excellent. And also put it a little closer to here, 51. Okay, maybe flatten that out also. And our, yeah, so that's how it's gonna look like. We're gonna minimize it a bit. And now that looks much better. Excellent. How did you get 2 to 3 days? Well, the 2 to 3 days, again, the 2 to 3 days, guys, is a result of an approximation of the average movement versus the price we were expecting, which is far away $10. So this is what it can move per day, right? So hypothetically, it can move this times X amount of days, right? So if this would have been a guaranteed movement for coffee in one direction, I could expect coffee to make $67 in 10 days. That is insane, right? Now, if we're looking at the actual price, this should have been higher. There we go. If we're looking at the actual price we're intending to sell, right? 342 and 332. You see that there is $10 difference in here and $10. Let's make it $10 in here as well. And we're looking at the same ratio. Now, typically, I'm quite happy with the composition in here, but the same ratio is not something I'm too happy with. There is another question. How is it possible to get that's an excellent question. I'm not sure we can do it in here. As you can see, we have here the bars and the line, but you can do it with MT4, MT5. Now, how can I fix the ratio between the ratio that we have in here to a better ratio, 1 to half or 1 to 2, whatever you want to call it? So we've got the entry, take profit, stop loss, and then we've got the values are 342, 332, 352. This can result us 800. Okay, same apply in here, but we don't really want to work with this ratio, because if we do this with several positions, let's say 4 or 5 positions, this times let's say 4, so this 800 will become, let's say 5, so this 800 will become 4,000, right? 4,000, 40%. Yeah, so I'm not too happy about it. So what if I want to maintain the profit and I want to minimize my loss? So I do maintain the 8% in here, but in here it gets to 2%. Anyone has any idea how can I maintain the same profit, changing the ratio, keeping the analysis? Anyone has any idea? Question from Lila. How is it moving up and down? Right. What you need to do to move it up and down is to click on the column price. As you can see, anywhere in this area, if you click and you squeeze it down like this, then it allows you to move the chart up and down. Okay, we got to remember to do it if we want to move the chart. Okay, so anyone has an answer for me? How can I maintain this 8% and make my stop loss 2%? This is my actual exposure, guys. Pay attention. This is exposure. And a nice idea to calculate this will be possible profit divided by balance equals factor. And then we can go factor times 100 equals exposure. Therefore, if I'll take my 800 and I'll divide it by 10,000, this will equal to 0.08. And if I'll multiply this by 100, this will be 8%. If I'll do the same thing with 10,000 with the 200, then we'll see. Okay, and this is something I might be happier with moving forward to diversification. Okay, so 2%. I want to maintain 8% profit and 2% exposure. So if, God forbid, I lose on any of this position, I can compensate myself with the other. Okay, so one way to do it, of course, is to lower the lot size. But if I lower the lot size, I also have an impact on my profit. So if I do this, I'm going to make less. The whole point in here is to keep the profit, maintain, and lower only the possible loss. So how can we do this? All we got to do is basically look at how far away the stop loss is. And the closer it gets onto the entry, the less we can potentially lose. So by clicking here on the minus, I'm actually getting it closer and closer onto the entry, eventually to a point that I can see here 200. Of course, I didn't have to do it by clicking on the X because I could just place it $2 away. And in this case, it will be 344. Oh, sorry, 4. How much are we? We need to divide a 10 by 4. So we're going to divide 10 by 4 is 2.5. Sorry. Yeah, 2.5. So we have to add on top of this 2.5. So let's make it 3, 4, 4.5. Okay. And now if we're looking at the same numbers, we see that the numbers make sense. And now we can potentially make 800, potentially lose 200. Correct, exactly. Michael, you're a star. Great, great. So this way, what do you mean? Okay, so Frank, I will thank you for the question. I will explain what I mean by diversification. Basically, is it's very known that traders like to trade various things, not just coffee and not just one position, right? So if I maintain the same ratio, let's suppose that I maintain the same ratio and I like to trade I don't know, another few positions. Okay, let's maintain the same ratio. Sorry guys, and with the same ratio with different instruments, let's delete this, also delete this, also delete the initial values and just keep it like this. All right, so let's suppose we've got this and some of the position makes profit, some of the position have losses. Naturally, you can see, Frank, that even if I lose 3 positions in here, right? Again, let's suppose that I lose, but this position make profits, right? Do I make overall my net is positive or negative? What do you think? No, no, no. You didn't. Okay, so what Frank answered? Just a second. So what Frank answered is it only useful if I take more positions? The answer is no. This is useful regardless, but with this ratio, the way that it's effective is if I would keep it like this. Let's suppose that I would keep it like the initial values that we work with before we did the adjustment, okay? You understand that if I will take the ratio in here and I will multiply it the same way, and I'm gonna lose 3 out of 4 positions. You understand that there is no position to compensate the same way that I'm doing in here, right, Frank? Yes, yes, it's related to risk money management. All right, guys, we are. I hope that this was useful for some people. That this was useful, and you guys were able to learn something from this webinar. As I said, even if you didn't get even if you haven't understand everything, you can still watch the recording in our YouTube channel in your own pace, as many times as you want, for you to better understand what I've explained in here. And as I just said to Frank, this is universal and should work with all the other instruments the same way, not specifically for coffee. And I hope this can be useful. Either way, I wish you all best of luck with trading. It's been a pleasure giving you this webinar today. You're all welcome to join us tomorrow. Until then, best of luck with trading and have a good day.